I'll start by saying congratulations to Nicholas, Olga, and the entire Capital Link team. I think it's another amazing event this year, and it takes a lot of organisation, I know. I think certainly the Athens conference is one of the highlights in the Capital Link calendar, and this year certainly no exception. I think the only thing different this year is that we've had challenges of snow, which I think is a rarity, but we all managed to get here okay, so I'm pleased that we managed to do that. I also noticed that the last question from the previous panel was who pays, so I'm not sure if you can get a better introduction to the banking and finance panel discussion after that. But just to briefly introduce myself, my name's Jasel Chauhan. I'm Head of International Finance at Dickinson. And the subtopic for today's bank panel discussion is adapting to a new market, regulatory, geopolitical and ESG landscape. But to be honest, if we managed to get through 10% of that, I think we would have done well. And just to start that discussion and briefly introduce each of our panelists. To my left, we have Anastassia Tcherneva, Global Head of Shipping at ABN AMRO. Next to Anastassia, we have Vasilios Maroulis, Managing Director, Global Industry Head, Shipping Logistics and Offshore at Citi. Next to Vasilios, we have Evan Cohen, Managing Director and Group Head of Maritime Finance at CIT. And last but not least, we have Christos Tsakonas, Head of Global Shipping at DNB. So with that brief introduction, I think we'll head straight into the questions. I think as usual, we'll start with an overview of the prior year from each of the panelists and what each bank sees for the 12 months to come. I think just to add a little bit of context to that discussion, looking back at the 12 months ago, around this time last year, it was actually before war, shipping seemed on an unstoppable upwards trajectory. To some extent, you would wonder whether that's continued to a degree as well. So I suppose it would be in that context that I'd open the floor to Anastassia to share her views.
Thank you very much. Thank you very much, Jasel, and thank you for the opportunity for being here on stage together with my partners in crime. It's always good to touch base when we live in such a dynamic and evolving world. So if I look at the last 12 months, essentially there are two things that come to my mind. One of them is ESG. It is not a new topic, but it's a topic that is definitely gaining a lot more interest than it used to be. That should not come as a surprise, given the geopolitical tension in the world, the awareness of society, and what regulators expect from banks to play their role in the market. And the other thing is license to operate. What I mean by that, that's compliancy. That's also not a new topic for this sector, but very much right front and center for us as a bank, being active with this industry. And this is very much something that I do expect also going forward that will keep us busy.
Great, thank you. Vasilios?
Thank you, and it's always nice to be here in Athens. I think, look, the shipping portfolios have performed extremely strongly, I think, on almost all segments last year for a variety of reasons. And, I think increasingly all the banks are continuously have to deal with black swan events, which are increasingly becoming an annual thing. So everyone needs to be prepared for everything. I'll echo what Anastassia said, continuous focus on ESG. And I remain cautiously optimistic for almost all segments, probably with the exception of the container side. But again, on the container side, for this audience, I think, most of the companies have long-term employment. They are able to potentially weather the storm. The operators is a slightly different story, and we shall see how that evolves. So the low order book on the tanker, the dry bulk side is something that probably could, propel those markets Of course, we do have a war in Europe, and that is, to me at least, a big question mark as to what happens. So if one feels that either that is contained, or of course it continues in this way, which is not something that anyone wishes, that's one story. If of course it escalates and escalates materially, and I think, all of the things that I've just said and we are all planning for probably is out of the window. So, an interesting year.
No, thanks for that. And just, I think, developing that subject a little bit more, I mean, as we were in February 22, from that point in time, there was everything from war, sanctions, an energy crisis, more sanctions, COVID again, specific to China, fuel price caps, freight rate highs and lows, and also recession on the horizon. So that's just in the last 12 months. So where do you go from there, knowing that all those possibilities could be out there? I'll pass that difficult side of the topic to you, Evan.
Thank you. Good morning. I don't know if it's that difficult. I mean, the fill in the blank part always is changing in shipping. I'm always impressed by the adaptability of ship owners, especially in Athens and in Greece. So hopefully the bankers and the financiers are also adaptable, and we try to be. But last year, we go back a year, you look at container ships making unheard of amounts of money. So are we clever enough to support it but not get carried away? And okay, so something this morning where values are plummeting and crashing, wonderful headlines. And I haven't seen any owners or banks suffering yet for that. I also haven't read the headline about charters being renegotiated or people walking away or asking those kinds of things. So people are adapting, okay? Then bulk carriers had their moment or months in the sun, and now tanker owners are. And during that evolution process, people are adapting to new regulations, to becoming more fuel efficient. So I'm not terribly concerned about the changes that come up. So I'm back to fill in the blank. For what is the challenge for shipping? They seem to adapt.
And that's interesting. I mean, I think whilst lots of things change, there's always new challenges. I think it seems to be that reference to the fundamentals still stay the same, and I think that's where some of the strength lies. Christos?
If we wanted a quiet life, we would not be in shipping. I think we are used to cycles, we are used to extreme events. The reality is, it is in these extreme events that the industry thrives. And, we have the tragedy of the war, of course, but it has been a net positive for shipping. If we look at tankers, trade patterns have become much longer. That has been a net positive. On the dry side, we've seen also suboptimal trade patterns. The order book has been kept very low because of energy transition. That is a positive. I'm a bit more skeptical than you, Evan, on the containers. I think it's early days. Of course, these companies have very high buffers of cash and they're being supported. But I think renegotiations of charters are inevitable and we will see them sooner rather than later. The structuring, though, this time, that the transactions I've seen, they're much more sound than in the past. A lot of front-loaded repayments, a lot of liquidity. So I think it will be positive. For me, there are two axes, really, that we focus on. One is the credit risk, and the fundamentals are good for shipping with a healthy order book. The supply side is in check, and also the demand side, bar a bad recession, which we don't seem to be having, should be under check as well. It's really the energy transition and how people adapt to new technologies, how banks adapt to lower emission requirements. I think that is something that we're spending quite a bit of time on, and that is something that is really disrupting our business model in a major way.
Great. Thanks very much, Christos. And I think sticking with the state of the market, I mean, we'll have a lot of topics to cover, but bring it back specifically, I suppose, to the shipping banks, the state of the finance market. What was previously alternative finance is these days not really considered that alternative anymore. There seems to be a lot more choice in the market, but I would open this question to each of the panelists. How do you see the shape of the ship finance market changing? Some international banks still starting to recede from the market, regularly new players as well. Obviously, all of the banks on this panel, stalwarts of the industry survivors, still here and going. But how do the panelists see the shape of the actual finance market changing, the players, the offerings?
No, that's always, so I'm sitting on your left, you always start with me, so then it's good that I know how it goes, the sequencing. Look, I think there are various options. They've always been, and I do believe that they will stay there as well. If we look at alternative financing, well, they're always, it very much depends on the investment horizon. There are always folks that are looking for a certain yield. I always say that demand and supply will be in equilibrium, so I believe that it's still going to be the case. Obviously, there are a lot of options also coming out of Asia. They have a lot of advantages, but also disadvantages. When I look at Europe, looking at the banking landscape, historically, it's always been European banks supporting this sector. And I think that's for a reason. We know the cyclicality of this market. I believe that everyone sitting on this panel would agree with me saying that our institutions have an ecosystem, what I call the shipping ecosystem. So we are very much familiar with the trends. We have the expertise in the house, and we have the stomach for the cyclicality. Having said that, it's becoming increasingly complex to operate in a high, proactively compliant environment. So this is something that does keep us busy. It does also provide a lot of opportunity. We are looking at a big disruption when it comes to climate transition. And I believe that every crisis offers also an opportunity, and we are very much looking forward to be at the forefront of it together with our peers, so other banks, and obviously following the direction of travel of our clients.
First of all, I think it's great news, and each and every time anyone asks me, is seeing new participants, regardless of who they are, where they're from, what they're doing, which structure they prefer, is good news for the industry, and ultimately the wider, if you wish, ecosystem of our clients, if you want to call it that, which is, of course, the ship owner and the shipping companies. So I welcome that, and long may it continue. With regards to, I think, where is it going, you're always going to be seeing totally different strategies depending on the institutions. I think one thing, it is indeed the case that historically European banks have supported in a significant way. The same goes, in terms of, I represent, of course, a US institution which we have been supporting the industry in excess of 75 years. So it's each and every institution will have its own strategy. We are totally focused on being a corporate financier and not an asset financier, and ultimately, we will be proceeding down that path. I think one thing to see how that evolves is, of course, Basel IV with regards to the European institutions, and what does that mean with regards to how they need to adjust the corresponding portfolios, and of course also with regards to leasing structures. One needs to bear in mind that the ownership of the vessel is no longer yours. And what does that mean? We've seen situations, for example, where out of nowhere a vessel has been sanctioned as a result of that ownership, through no fault of the bareboat charter. What does that mean if there were to be escalating tensions between, for example, China, Taiwan, Israel? So all of these things are extremely complex. One needs to bear them in mind and proceed accordingly. But I think in terms of capital availability, the fact of the matter is that each and every institution will continue to proceed down its own path. But I do believe that there is substantial common ground and scope for cooperation.
Thank you. And just to kind of develop that question a bit more, I suppose you mentioned that European and American banks on the panel, and whether that is something that will either maybe shift the market to refocus on those own markets, so Asian banks and lenders lending to the Asian market, and European and US banks lending to their local markets as well. So that's one part of the shift in the question I'd like to ask. And I suppose also all of the banks on the panel have shown a great deal of growth over the last few months, years as well. So that's certainly a supporting element for and commitment to the market. So just those slightly different themes, I think I'd like to pass to Christos and Evan, if that's okay.
Maybe I start. I mean, if we look at Western banks at the moment, if we take Greece, for example, there is abundance of capital. There is abundance of cheap capital, actually, for shipping companies, irrespective of size. But things, will change. I mean, Western banks, they need to become at some point compliant with Basel IV. That will have an impact on the cost of capital, which means that pricing will go up. The biggest challenge or issue that I see is there is a very high level of focus on ESG, very high level of focus on carbon intensity in portfolios and deals that Western banks finance. So that will put a limit on the appetite that banks have, particularly for older or higher emitting categories of vessels. That restriction does not apply so far to Asian banks. It probably will lag for quite a bit. We see also the Greek banks here being extremely active for the medium and smaller sized owners. That is very positive news. That probably makes the alternative finance platforms a little bit less relevant than they were before, given the return requirements. But I would say, and I look at my fellow panelists here, that there is a lot of capital around at the moment at significantly cheap levels, actually, in the Greek market, across the various sizes, spectrums, and qualities of shipping companies here on the ground.
Great, thanks.
So the advantage of going forth is I get to think about that question, which I hadn't seen earlier. So for all my friends and clients in the audience, I've never been exclusive, so I'm always competing against somebody. Okay, maybe it's not big competition, other days it's heavy competition, but on one hand, we know that some of the European banks or the traditional banks are leaving, but it doesn't feel like there's a lack of capital. So I was sitting here thinking about that. So the capital's flowing from different places these past months and years. So the local banks, and all of a sudden the Greek banks are very active again. You see debt funds in a large scale providing access, whether it's oak trees and their different funds or Australis and their different funds. You see platforms. My old boss and friend is in the audience, setting up a platform, making it easier for, let's say, smaller owners to have options on where to access. So all of a sudden, money's flowing in from other places, and I don't feel the lack of capital either. Christos is more precise about it than I am, but that was my take on it.
Thanks. Did you want to jump
I
in?
actually wanted to add something. So I subscribe to everything that was said here on the panel. What I do think is that increasingly there will be an ESG lens to capital allocation, and it will go in different speed across the globe, but I think the trend is very clear. And yeah, I believe that Europe will be leading this trend, and we'll be seeing more and more of attention to it because our stakeholders also demand it. I mean, the stakeholders of any bank, that society is large, it's our regulators, it's our shareholders. So it's definitely something that will be right front and center when we are allocating capital.
Great. I mean, that's certainly one of probably the largest topic for the discussion that we'll head on to. But just before, I think, reaching that, I think I wanted to discuss actually specifically the Greek market. There's obviously been a lot of investment in new building programs and improving the efficiencies of the existing fleet. It's clearly one of the most important markets for global shipping and for each of the banks. And I suppose I wanted to take that question to how each of the panelists see the Greek market, the advantages, the disadvantages, and how those can be used as we do move towards that green shipping aspects and the challenges that are there. I'm going to mix things up, and seeing that you spoke last, I'm going to throw the question down to the other side, if there's any takers. Christos, would you like to start with that?
I mean, green shipping and reducing the carbon footprint of fleets is not an option. I don't think it's something that people can choose to do or not to do. It's something people will have to focus on. You will see demand from clients, you will see demand from financial institutions, you will see demand for end users for cleaner transportation. And there is a lot that has been done. I've been impressed actually by the speed of awareness. A couple of years ago, we would sit in a room like this and we would talk about ESG, and owners on the panel, on the audience would think, that's completely irrelevant. That has changed 180 degrees now. It is at the top of people's agenda. Geographically, maybe it varies a little bit. We see tremendous focus in Scandinavia. We see quite a lot of focus in Greece from the bigger companies. It is trickling down to the smaller ones as well. People are aware about the emission of the ships. There is a lot that is being done to improve the operation of the ships, be it better quality paints, improvements in the propellers, bubbles under the hull, weather optimization software. So there is a lot that is happening. People are looking at carbon capture very seriously, and I think this is a technology that will become much more prevalent in the years to come. Now, when it comes to alternative fuels and engines, I think we are still some way away from people being comfortable to make an investment or a sizable investment in that, but it is also coming. So I see people extremely focused on this, and I think is what we are going to be spending most of our time in the years to come, figuring out how do we play in that space, who do we back, and how do we finance this type of projects.
Okay, Evan, would you like to share your views on the Greek market?
No, I'm just happy to be here in the Greek market. I want to do more here. But in terms of how the ship owners and operators are handling E, S, and G, we'll talk about the E, the environmental, I guess we're talking about. All these incremental changes and adapt the ships are making a big difference. And 99.9% of the owners are compliant and will follow all the regulations and want to become more fuel efficient, if for no other reason than it's economically smart. So the difference, I was trying to do some studies last night and speaking to an owner, and the difference between a 16 or 17-year-old bulk carrier and a comparable new build in terms of efficiency is staggering. I didn't quite believe it at first. We're talking about 50% more efficient. So going that much further on the same tank of gas. So yeah, I'm impressed by the adaptability.
I'll echo what Christos said. This is not going to be. It's not an option. The ultimately under Scope 3, the clients will be demanding a significant, of course, reduction in the carbon footprint. The commitments that they have made very publicly, very large companies, is going to be something that they will demand in order for them to be able to decarbonize effectively their chains in terms of how they deliver goods. We're already seeing that on the liner space, significant actions being taken. We're seeing it also on the auto liner space, where you have a very, very expensive product and the OEMs demand at this point a very specific reduction in order for them to pitch it to their clients. So you're going to increasingly see it, and with the Sea Cargo Charter and everything else, it's going to be something that's there. Now, how are we dealing with it, at least so far? The Poseidon Principles is a very useful tool in terms of measuring and also being able to manage it on a portfolio basis. So as a result, each and every member who is a signatory can say, okay, on this loan I'll do this, but at the end of the day I'm managing the portfolio on a total basis. But the focus is going to be there. The pressure will continue to enhance itself, and ultimately it is extremely important. That being said, 3 years ago, honestly, any discussion we were having, there was no clear sight as to where it was going. You couldn't see how we would be able to go down the path of what was clear that was coming towards us. This year and the year before, there's a lot of discussion, but also solutions that are increasingly apparent. And therefore, I do sincerely believe that this industry is doing a lot. It needs to publicize in a significantly better way. I think it's totally misunderstood. And ultimately, this will continue to evolve. I do believe that at some point there will be a discussion as to what is better. Retrofitting, improving a second-hand vessel in a significant way, or a new building which is more efficient. Because, ultimately, there is CO2 emissions involved in actually building the vessel. So these discussions will evolve, and I think increasingly important. But again, very optimistic with what we are seeing.
Great.
If I may add, I think the last point,
If
I may add, just the last point Vasily made, I think it's extremely important. Focusing on how we can make the existing fleet more efficient should be people's focus as stage one, I think. There is a lot that you can do to improve the operation of the ships. Just going out and building a new vessel that has an environmental footprint that is quite detrimental. We're not saying no, it makes a lot of sense, but I think we should try to exhaust what can be done with existing ships first. And there is a lot that can be done to improve them. So that's quite important in the overall scheme of things, I feel.
Yes, thank you. I would like to echo a few things that were already told and maybe kind of summarize it and not to repeat what was already said. So a couple of things. Data. I think we sometimes underestimate how much data is available out there when it comes to the shipping industry, and how much better use of data we could do. So that's both for ship owners, it's also for capital providers. There's a great amount of awareness. People are curious and very much adaptive and looking at different options. Strategies vary, that's what I see, which is quite normal, right? And I don't think that there will be one solution to this massive disruption that is coming our way. What we do look at is what I call the Chinese menus. So obviously we all know that new technology and new fuel is not yet scalable. So everyone is looking at how to best retrofit the current fleets. In that respect, there's quite a lot of advancement in terms of the economic model, what is possible, what are the trends. And what I've also noticed is that some people are, setting a trend. And what's beneficial in that is that you get a lot of profits out of it. So there are different strategies, I would say. Some front runners, which are already, let's say, pocketing the benefits, and people that are trying different strategies and seeing what works.
Great, thank you. So we're definitely moving into the specific topic of the green shipping and the financing of those aspects. But the unusual thing for me is looking back at some of the panel discussions over the years, and actually many of them with the panelists here today. I remember when we used to talk about LTV and margin and financial covenants and these types of things that were the typical questions on bank panels, but we're certainly very much moving into one of the key focuses, and as many of the panelists have said, that it's not an option, it's something that has to be done. So, but for me, and changing that shift to the question, dealing and considering things like EEXI, CII, ETS, there's a lot of challenges in actually understanding the options and trying to work out what those challenges are. So, I think what I'll do again, I'll pass this back to the other side of the table with Christos. That I think there's a consensus in terms of the direction. But what are the key challenges, especially from the financing perspective and the bank's perspective, actually trying to help the market progress with those initiatives?
Mainly on environmental matters, you mean, or? I mean, we have set up, together with Citi and SocGen, the Poseidon principles. That was a fantastic way to start measuring the carbon intensity of people's portfolios. We are looking to take this at the next step now, try to figure out a trajectory that makes sense. How do we get to zero at 2050? I think that is the challenge that everybody's focusing on. How do we do that in a responsible way? How do we do it in a way that does not make existing vessels obsolete? How do we do it in a way that does not force us to exit relationships and business opportunities that we've had for many, many years? How do we do it in tandem with developments in technology where people take calculated risks and responsible risks? And how do we use our structuring capabilities and our distribution capabilities to take this risk and place it out in the market? I think it takes two to tango. So we see a lot of willingness from owners. There is certainly a lot of willingness and commitment from banks with very set KPIs, but ultimately somebody has to pay for all this. And if everybody keeps on pointing the finger to the other person to put their hand in their pocket, things will move very, very slowly. And this is where regulation will help as well. I think we see these ETS schemes that are being developing. Over time, it will be expensive to run older ships. It will be expensive to run ships with old technology. That will help incentivize the move forward. But it has to be done in a responsible way, and it has to be done in a methodical way, hand in hand with technological developments. I don't think any owner, would be happy to start ordering speculatively vessels with engines that do not have a track record, with fuels that they do not have certainty of availability. And that's why I come back to what I said before. It needs to be done in a step-by-step process, and I think we will probably see improvements and efficiencies on the existing fleet to start with. We will see carbon technology developing as a next step. It's already quite advanced, but it needs to become cheaper and be able to capture higher amounts of the carbon. And then gradually people will get the confidence to start ordering new engines and new technology vessels. So that's how I think things will pan out in the years to come.
Great, thanks. Evan, would you like to?
Yeah, I didn't see such a disconnect between the LTV questions you got in past years and the question of today. For us, our first responsibility as financiers is getting repaid. And that means your clients have to earn cash flow. And where's the cash flow coming from? Okay, this year it's going to come from Cargill, for example, who's checking your rating. So that's going to force ship owners that are more bankable to be compliant and be efficient. Okay, if you're running it a different way, a vessel, you need to be efficient and you can't waste money unnecessarily. So you're going to do all those incremental changes. And I think there's also capital there for the new projects, but that is, okay, someone's building LNG-ready ships, which is a nice phrase, but you build and make that capital expense because you have a charter attached, and a charterer wants you to build those ships. So I still think it comes down to the revenue, how the owners are going to make the money, and then repay their capital.
Look, there's not going to be one solution. It takes all of what Christos said in order for ultimately for this industry to move in the direction where it has to. Not only, and it has to because ultimately it's what the consumer will demand. They're already demanding it in specific products, and it's only going to be increasing in terms of pressure. So in order for this industry to remain at the front and center in terms of goods carried across the world, then for their clients be relevant, and for the consumer, all of the solutions, whether that's trying to utilize LNG technology as we speak, shifting into alternative fuels. When will they be provided? Will they be provided on a blue, on a brown, or on a green basis? And what is the impact of green methanol, for example, versus low sulfur? These are debates. It requires a lot of analysis. It is something that both the ship owner is burdened and the banks, of course, because it takes significant resources to be able to do that. But I do believe that the willingness is there, solutions increasingly becoming available, and all of it together will come into play, and all of these solutions are required. Where are we looking at? We're looking at our clients, right? And our clients are, the ship owners that we serve, that we bank, are the ones that need to look at these solutions and see which ones fits them, and then we will be there to support, and that is a certainty.
And just picking up on that and the theme as well, is that, certainly one of the stark differences is that even, as Christos has mentioned, the discussion of ESG even 12 months ago is very different, and there's been a lot of progress in that time. So I suppose it's in that context that, Anastassia, I'd welcome your views.
I think what I would like to add to what was already said, to which I do subscribe, is, decarbonization or sustainability is a trend that will be adopted in the, let's say, in the capital structures that are supporting this industry. And what is very important is to look at the various options and to look at the best solution. So how can we basically integrate these solutions? So at the forefront of that are the ship owners. I always say, we bankers, we advise on capital, we provide capital. We are there to enhance the journey of our clients. We are there to enable the journey. And what is very important there is to stay in close contact and to think of the solutions. As already said, there are incrementals, what I call the Chinese menu, and we see that there are a lot of folks that are investing heavily in that because they do see a trend and they do see that society, charters, they're willing to pay for it. So there's a market for that. When it comes to new technology, then we do have to look at the acceptable capital structures, just like with any new trend. You start with capital seeds, you start with joint ventures. So we need to very much think along in partnerships and investing together, and that's something that I'm very much looking forward to do with owners and with other parties active in the market.
Great, thanks very much. And I think to some extent, as anticipated, I think we've barely managed to scratch the surface of many of the topics, but we're very quickly running out of time. So I think I'll actually just open this for any general comments that the panelists would like, and then just a reference to a Greek ship owner's phrase. I won't embarrass myself and try and say it in Greek, but the gist of it being that Greek shipping may get sick, but it will never die. So I think in that context, there's certainly been some rough rides, but everyone, both on the banking side and the ship owning side as well, have survived some tough times. So I suppose in that context, I'd open the floor for any closing comments from any of the panelists.
Maybe one comment from me. After many years, the fundamentals in shipping are very positive, maybe with the exception of containers. And the lessons there for everybody is, please do not order any ships in the traditional sectors. We have, very good markets ahead of us. Let's not destroy that this time.
May I add something to it, maybe a little bit on a different note? So I would say my message will be keep your passion, because that's what keeps us going, and at the same time keep calm, cool, and collected, because it's a long ride, and I think it's going to be a bumpy one, but definitely worth the go.
Yeah, from my end, I'll echo what Christos says. I do believe all subsegments which are relative to the Greek shipping community have extremely positive fundamentals. Therefore, on the back of that, you have a very meaningful platform to be able to proceed down the various strategies that one wants to have. And I do sincerely believe that this is the largest. It is the largest commercial fleet globally. It's the heart of shipping, and it is indeed the case that there is a very positive momentum in Athens and Paris.
Evan, before closing, would you like to have the last word?
Not really.
Okay.
I wouldn't presume to give advice to the owners in the room. Just thank you for the business. So one note, so doing the usual banker tour, the dozen or so clients I've gotten to see, or owners I've gotten to see, every one of them has had the second or third generation in the room. So that's a sustainable business practice. So on that note, thank you for having us.
Thanks. And just before handing back to Nicholas, I'd just like to thank each of the panelists for their time today and the discussion we've had. Thank you very much, Nicholas.